let's dig into Unit 1.2, which are all the types of business entities. First off, we must distinguish between private and public sector. The divide is very simple. The private sectors are all the businesses owned and ran by private individuals, whereas the public sector are all the businesses controlled by the government. Now, both of these sectors can be broken up into two categories, being for and non-profit. That simply just means whether they're allowed to earn money or not. Before going into the different types of business entities, let's visit two important factors. The first is economies of scale. We'll visit this one a bit later. However, the principle of this is that as output increases, average cost decreases. By making more product, each singular piece will cost less because of buying and producing in large quantities. If you buy 1,000 pieces, that's probably going to get you a better deal than buying one singular piece. That's the essential idea of it. We'll go on to the different types in a later video. The second concept is liability. When you ask a bank for a loan, they must ensure that you will pay them back. They hold you liable to your payments. They're entitled to therefore take away some of your assets if you don't do so. They can only do that, however, with the person that's on the contract. The bigger companies can kind of get around this by only putting the company name on the contract. Therefore, the actual singular owners may not be affected by this. So keep this in mind when we look at advantages and disadvantages of the different business entities. Let's start with a sole trader. Of course, by its name, you can tell that that's a business owned by a singular person. The advantages of this are that it's quick and easy to set up. All the profits are obviously going to the owner. You have more motivation because you're more involved in the business. You have complete control, therefore it gives you quick decision making. You have privacy because all you need to do is file your taxes, and you have tax advantages because usually governments kind of give you benefits for running such businesses and helping the economy. Disadvantages, however, may be that it's obviously harder to finance such a business because you're the only one that is putting money into it, and it's hard to get loan as a singular person. You have unlimited liability, which, as we were talking about before, essentially the bank can take away all of your assets. You have very high workload. There's a lack of continuity if something happens, if the owner dies, or if you may not show up to work that day. It's obviously harder to get economies of scale, as we discussed before, and it's way harder to expand because of all of these factors. Now, the second business type is a partnership. Partnerships are businesses owned by two or more people. The advantages of this are that you can raise more finance than sole traders, as obviously there's more people involved. You have more ideas and skills coming into the business. You can share the workload and benefit from specialization, as different people can do what they're best at. You obviously have continuity because there's a large amount of people running the business, but you still keep that privacy and you don't have to release statements to the public. Some disadvantages, however, may be that it's easy to disagree on decisions because you have so many people making them, which obviously causes slower decision making. The profits must be shared between all owners. You still have unlimited liability for at least some partners, and it's really hard to replace a partner that's in the agreement. Now, let's go on to public limited companies. These companies all have limited liabilities, and they're split up into two different sections. The first is privately held companies. These are companies which ownership is split up into shares, which are usually sold behind closed doors. The owners are separate legal entities, and these companies are usually kept within families. An example of this is IKEA, which is all kept behind which is all kept within the same family. Advantages of this are that the shares are very controlled and it's really easy to control who they go to. Much more finance can be raised compared to other business entities, as if you're a privately held company, that means you're big and it's way easier to get loans. You have limited liability in this case. There's lots of continuity and you can benefit from economies of scale due to your big size. Disadvantages, however, may be that all shareholders must give approvals in order to sell part ownership and also to make decisions, which therefore makes it very easy to disagree. You have way higher legal fees and you can become targets of takeovers if someone wants to buy you out. The second type of limited companies are publicly held companies, which the only difference is that the share of this company can actually be sold on the public stock exchange. This is done by having an initial public offering or IPO, which essentially just means putting your shares onto the public stock exchange. The advantages of this are that it's really easy to raise finance because you can raise it through the sale of the stocks themselves, and also obviously it's easy to get bank loans due to your large size. You can benefit from economies of scale, you have limited liability once again, and you have a lot of continuity. The disadvantages of this, however, is the complete lack of privacy. You need to let everyone know what you're doing because the investors must be protected. It's very administratively difficult to keep and expensive to run, and you have potential threat of hostile takeover, as if people want to buy controlling shares into your business, they can do that as long as they have enough money. Now, also, for-profit organizations may be called social enterprises. Social enterprises are companies whose primary objective is not to obtain profit, but to help society in some way, shape, or form. Keep in mind, they can still make profit. They do not have to not earn profit. There's 3 types of these companies, and that is private, which is privately owned. These don't differ at all from other for-profit companies. However, they simply may have a goal to help society. The second is public, which is obviously government organizations which aim to make a profit in order to continue to provide necessary services to society. This may be your public transportations and things as such. However, in these, profit must be called surplus and has to be reinvested into the company. And then there's cooperatives, which are companies run by its members in order to provide all of them a benefit. An example of this is worker federations, which may revolt against workers' rights and things like that. Those are run by its members, which also means that their profits are split up between members or can be agreed to be reinvested into the company itself. Of course, there's also non-profit organizations. The entities of these are quite literally can be the same as for-profit organizations. However, their profit must be listed as surplus, as they physically cannot earn money. Obviously, these companies are exempt from tax rulings.